Hey, my want me let go see pardon me. Twerk, 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 twerk. Twerk your body, twerk, 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 twerk. And I will say something. Remember, we struggle to know one thing. I pay attention to everybody in the group. I know those that are participating in the group. When it comes to the trading plan part, if you don't, I see everybody. If you don't participate and you come to my DM, rather than me helping you exchange words, I'm just going to delete chats and block you. That is what I would do, and I mean it. That's why I'm recording this too. When we get to the trading plan time, which is when a lot of you guys will be having a lot of questions, if you are not the type that participate in the group and you come to my DM, I'll delete the chat and I'll block you. That is what I will do. Because you were not there when other people are dropping chat, they are asking questions, they are engaging in stuff. Now, you now think you can just come to my DM and just ask questions when it comes to trading plan time, and you think I will attend to you when I have other people that have been participating and engaging. No, I'm not going to waste my time on that. You must have been a profitable trader. That is why you are not engaging. You must have felt like you are good at what you are doing. That is why you are not asking questions. So when it comes to trading plan or the assessment, if you come to my DM, I say it, I will block you. I think that is the most fair thing I can ever do. Because there's no point of you coming to my DM when you know that all you care about is just be ghost in the group. I don't care. That is not even my own problem. But don't come to my DM to ask questions. You don't deserve it. I would block you. Thank you very much. So let's proceed. If you engage, if you do not engage, remember you have paid me already. So ask yourself a question. If I engage, what would be Kamar's benefit? If I did not engage, what will be Kamar's benefit? None of it is my benefit. It is for your own good. So I'm not pleading. I even pray all of you should not even engage. So I will have less people to attend to. I swear. Because after the mentorship now, I can decide to delete the group and that's it. So it's not by force. So let's continue with the question and answer. Because I know when it gets to the trading plan, things will start to get serious. Because a lot of you guys, I've taught you guys a lot of things. You guys will need to choose the edge out of everything that I've taught. Because you are my student does not mean you guys have to trade the same thing. I have taught you guys a lot of concepts. Okay. So when it comes to trading plan, it means out of everything that I've taught you guys, you choose the best one that you like. And strictly that is the only thing you'll be looking for on the price. That is what they call edge. Not because you know everything. Because I know a lot of things does not mean I apply everything. No, I don't. That is not the edge if you apply everything. The edge is when you have seen a system. Yeah, till then, guys. So some cannot be taking their time to ask questions, learn, and some of you are just there watching videos. And later on, you will now come to my DM and say, Kamar, why do you take down those videos? Because I remember I did one mentorship like 8 months ago. And somebody texted me last week telling me that why did I take down the group? That he has not gotten time to watch it very, very well. After 8 months, 8 good months, what are you watching? Even if you want to watch, what's the name of this film? All these films that used to have season 1 to season 15. you will have watched it finish. So kilo little 8 months. You get me? So let's continue, guys. Enough of that. So good day, guys. I would love you to explain something you talk about in your pinned video on Twitter. You made mention of it that if one has 3 POIs, that the best one to trade is the extreme one. Can you explain the logic behind it to us? If you were in yesterday's class, I have already answered this question, which is you react, you don't predict. If you have 3 POIs, let me go through it again. If you have 3 POIs like this, let's say this is a trap, and you have this. Now, in this range, we know that this guy is an external liquidity. We broke structure here. Inducement 1, protected I, POI 2. This one, break of structure, boom, inducement 3. Because this is a volume violation. So now, it's either sell happen from here, or sell happen from here, or sell happen from here. So now, what do you do in this scenario? So far that you have these 3 POIs here now. What you'll be doing is this first one, you will be setting it, you will not be setting a limit. You wait for a lower time frame confirmation just to tell you that just to tell you a story that they want to use this one. But if the market just keep coming and it's come, bam, 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 it induce it, break structure, then it clear it, then you know that, okay, fine, no, they have failed this one, then this one too, you wait for a lower time frame confirmation. So if this one give you, then you sell. If this one did not give you, then you can set limit on this last one. Do you guys understand? Do you guys understand that?
Yes, sir.
But another good thing that you should know is every swap of every valid order flow is now a new potential entry for you. If this guy, you are looking to sell from it, but it broke one structure and it failed it, you should buy the opposite immediately, because it has already presented a buy setup for you. And once you create a new high, you should take out your major volume. The same thing as this one. If markets come here, drop a base, then go up, you should buy from here. That is flip zones. Because violation block. I told you when I said drop base drop, rally base rally. Your base is your supply and demand area, but your base has to be as a result of a protected point. Your base cannot be like this on lower time frame. Your base cannot be like this on lower time frame. Never. Your base has to be like this when you check it on lower time frame. This has to be your base. You can see that this is protected. Your base has to be responsible for a sort of inducements. Because let's say you have a break of structure now. What is an inducement in this way? Is when markets come here now, break structure, make them feel that they are right. Include a lot of traders on this trade and take them out. It's different. And so now this is a POI. It's different from when you have this. Where would you mark as your base? You want to mark this one when you know that this is a trend line liquidity. Do you get my point? Market will just clear you and buy from somewhere else. But it will fail this one because it is not from a protected point. Is that clear? So now, let's go more. Let's go more. Okay. Let's hear what this guy has to say here. Okay. The funny thing is, none of all these questions that you guys are asking, if you watch the video over and over again, there's one thing about my videos. If you watch it immediately, let's say you can gain two things from it. If you watch it tomorrow again, you would gain something else. If you watch it next tomorrow, another thing else, you will hear something else. You cannot grab everything at once just by watching the video once. You can't. But watching it over and over again, you will hear something that you feel like, hey, so Kamar even said this one here. So that is why you have to watch them over and over again. Okay? So now, so let's go. If a protected low or protected, does it mean the structure trend has changed? You know the answer. You know the answer already. If a protected low or high is broken, you know the answer already. I told you different type of break of structure. I said first break of structure is high, low, high, low, high. And when market breakthrough structure, this is a protected high. So now, another one is when you have high, low, high, low, high, the market create an inducement, then you take it out, then you sell. This one is a protected high. So now, let's now say, this one now come now, market now take it out instead of reacting to it. Market will not just take it out. Market will come like this, a drop base and a drop. So which means this guy is now a break of structure, then the market will come lower, then will buy. So this is a new swing because and when you have a money transfer like this, you believe the market is not supposed to take care of this protected high. So you continue it like that. So anything that I'll make, so money has transferred from year to year, from year to year. So anything that I'll make market to now clear this is a valid break of structure, then you buy. Am I clear? So that is that about this question. So let's go further. The reason why market came to your stop loss, how did it came to your stop loss? Okay, with this news. Oh, that one is news, wahala now. That is a manipulation now. That one has nothing to do with your price action. But if you go to line chart, you will notice that this week is not there. So which means they just came to take your money and that's it. So nothing else. This can happen to anybody. You understand? So this week is just to clear people's money and to steal people's money as usual. And I want you guys to know one thing. Because your mentor said this strategy is good does not mean you will not take a loss. And because you take a loss does not mean your analysis is wrong. I want you to have that in your mind. Because you took a loss does not mean your analysis is wrong. Loss is inevitable. Even the best strategy will experience loss. We are human. There's nothing like 100%. Take your loss, but there's stupid loss, there's reasonable loss. When you follow your rules and you take a loss, move on to the next one. Try to see if you can do better. If there's nothing to look for there, ignore it. Take that same setup when you see it again. Because you believe in your edge. You can't see a very clean protected trade, protected high trade, and because it stopped you out now, you don't want to take it again. No. You have to believe in your edge. That does not mean you will not take a loss. Okay? That does not mean you will not take a loss. So let's go further. Here is my question, but I think you understand it better through this chart. Yes, now, this is what I just drew. Can we both refer to a protected eye? Yes, now. It is the storyline you want to follow. So the both is valid. The both is very, very valid. I told you something about smart money reversal. I said, when the market, you might have a two break of structure like this, a major structure. And you can have one that will do something like this, high, low, high, then something like this. The one that you now even draw, even have an inducement. So this up that you drew, that is a what? That is a distribution. Because for it to now sell off and break a new structure, that means it broke structure 1 year and structure 2 year. So this first one, it broke structure 1 and it broke structure 2. The second one too. So the both is valid. So let's go. So I think that is that about all the old questions that you guys asked. So now, let me now use this privilege to explain this Wyckoff class that we missed, that you guys missed. Let me use this privilege to explain it to you guys. From the beginning. Let me explain from the beginning. All the old almighty inducement, right? It can be explained professionally with Wyckoff. And I will explain. If you can understand this, you will understand the concept of accumulation, reaccumulation, distribution, redistribution. Accumulation is what? When you accumulate something, when you buy. Reaccumulation is when you rebuy. Distribution is when you sell. Redistribution is when you what? Resell. When you sell again. So now, how does this imply to the chart? So let me first give you the random analogy. So, no, let me first explain. So this is what I mean. Accumulation means a point where you would buy from. I'm coming. Let's say market is selling. Accumulation simply means, let's say this is accumulation. I will explain it to. It simply means this point you will buy from it. Reaccumulation means when market is already buying and you have something like this, you will buy from it. So accumulation would only happen. Pay attention, guys. I really want to explain it in the best way that would help you a lot. Accumulation can only happen in an existing sell market. When market is selling, before it shifts to bullish, it needs to accumulate price. But reaccumulation, it is for continuation setup. Accumulation is for reversal setup. This is accumulation. And it is for what? Reversal. This is your accumulation phase here. Reaccumulation is what? Reaccumulation is what? Continuation. You guys should pay attention. No. This would help you arrange your knowledge properly. So now let me now explain the process of accumulation with Wyckoff. So now, let's say market is selling now aggressively. Boom, 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 boom. Before the market can say it wants to start to buy, you will notice, let me start. At start, the market is retracing less than 50% retracement. That means the sell volume is high. High volume. So now, at some point, the market will now start to weaken, which means, how would you know it's starting to weaken? You will now have a 50% retracement or above. So that 50% retracement is now what you call automatic rally. All this one, you can see the momentum, how they are strong. But this one, you can see that it's retraced to 50% and above. So that is an automatic rally. So after automatic rally, what would you have? You have your what? Secondary test. Secondary test can be in form of market inducing your automatic rally and sell-off. ST. But because we know that this point is not a protected point, so we will not really want to be trading from this guy. But even if you want to trade it, you will now have your secondary test in phase B. Forget about the diagram or the names. Forget about the name. You now have another secondary test here. So after secondary test, what do you notice? This guy has mitigated this guy properly now. So, and the mitigation did not create a protected eye. So, which simply means this is now liquidity. So, after that liquidity, what would you have? Automatically, secondary test, you will now have UT, uptrust, or UTAD. No, uptrust. Uptrust is now when market will create an inducement like this to clear these two liquidity here. So once they now create the UT, market will now come for the final manipulation of this UT. Then you will now have a true break of structure. So that true break of structure is now your what? UTAD. So that UTAD is now your what? The beginning. This is now your liquidity. So this UTAD is now your beginning of your bullish storyline. So this whole process, it is what we call accumulation. Now, it is not always picture perfect like this. But one thing that I want you to know is accumulation is simply market inducing a point, market selling, getting weak, creating an inducement, which is a first break of structure, clearing the inducement, then a break of structure. This is an accumulation phase. So, which now means you can now buy from here. So a new story has started now. So this same story of accumulation has to now happen in the form of a continuation. So for you to have a reaccumulation. So what does that mean? Well, let's now say market is retracing now. If you have an existing liquidity, then you can say, okay, oh, I will buy from here. Because you already have an existing liquidity here. And this top hunt of this existing liquidity is your UTAD right here. Is your UTAD right here. Because you can see this is the inducement here and it's being stopped out here. Now, this is your inducement here and it's being stopped out here and it breaks structure. So this is your UTAD and you can buy from here. So this process right here is your reaccumulation process. Or you can now have your reaccumulation process in form of what? POI inducement. So which means you can have high, low, the market would come, it will be selling, then it will give you the process of what? Of this thing back, which is boom, 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 inducement, take it out, then buy. So this is a process of what? This is a selling. So this is accumulation. But in the major trend, because we are bullish, in this major trend, it is a reaccumulation. Do you understand what I'm saying, guys? In this trend here, it is an accumulation because it is coming from a sell market and it's accumulated and buy. But because we are bullish in the first place, so in this overall trend, it is a reaccumulation. So which means those are the areas you want to trade from. So at the end of the day, it still goes back to the rule of protected highs and protected lows. But understanding that you can only buy, you can only look for a reversal or try to trade a reversal after you have spot an accumulation. And for a continuation of an existing trend, you can only join after you see a reaccumulation. And what is accumulation? Accumulation is when market trap a zone, then it breaks structure. Reaccumulation is when you have an existing trend and at the point in time around here, market accumulated. So this is your reaccumulation. But it is an accumulation in this trend, but in this trend, it is what? It is a reaccumulation. Do you guys understand what I'm trying to say? So any point you see an accumulation, you can put a box there, you will get a reaction there. It is a must. Guys, do you understand my explanation? So every POI you want to trade must have an accumulation or reaccumulation. Your reaccumulation is also an accumulation, but because it is in an existing trend, so simply means in this trend from year to year, this price action here is an accumulation. But from year to year like this price action here is a reaccumulation. But do we care? No. All we care about is this accumulation that is there. That is when we can now position ourselves for a new buy. So which means a protected high, a protected low is an accumulation point. And those are the areas you want to trade from. Am I clear? You don't need to cramp the diagram, but explain the logic, understand that logic that I just explained. So that is everything about Wyckoff. I make sure I made it short. Now. So let me try to...
Sir.
Okay, I'm with you.
Thank you very much, sir. I'm not gonna lie. This same Wyckoff, now waiting I done for everybody before. Now you just break everything down in the simplest way. Like Wyckoff are the most difficult one to see that I don't come across before in my life when it comes to trading. Thank you. God bless you, sir. I know, like, God bless you. And sir, I also want to remind you, I don't know if you forgot, just to remind you, I said, well, there is some topic that I think it's Kofi dropped. It's going to be dropped in the announcement side, like some topic you say you're going to teach you.
Yeah, I would definitely. See, I'm trying to answer questions. So I remember, I promised you guys I will explain the Wyckoff again. So that's why I decided to quickly barge into it. Okay, we have not even talked about session. We've not even talked about intraday market cycle. So you guys should not worry. So this is everything about Wyckoff. If you see somebody say, Kinekan AOI, Kinekan, this is what they are looking for. This is what they are looking for. So you don't need to cramp automatic rally, secondary test. It is the purpose. Now, what is the purpose of Wyckoff? What is the purpose of this circle? Now, let me tell you. Your automatic rally is like, okay, the sellers tried. Look at this one. They didn't pull back to 50%. But when it gets here, the sellers tried. Right? The sellers tried. That's why they are able to push to 50%. Now, they still failed. Market create a new low. But they are seeing that people that saw that this 50%, they are seeing that, okay, the buyers are trying to get in now. Now, we got the first break of structure, mitigating an unprotected high. Now, some people want to jump here. They get stopped out. So getting stopped out, you are smart, you know that this is a protected point. You sold from here. You take your TP here. But you remember that this guy, the mitigation did not create a money transfer mitigation. And what is a money transfer mitigation? A money transfer mitigation is a mitigation. Wait, guys, am I recording?
Yes, sir.
Yes, you are recording.
Thank God.
You are recording.
So the mitigation, you know that I told you, a money transfer mitigation has to be a mitigation that has a accumulation or distribution. There has to be a stop on there. But this one just mitigates, it's mitigated with just a peak formation. And a peak formation is also a form of liquidity. What's a peak formation? A peak formation is when market get to your entry like this, inducement, and it tap it, and market this is your protected high, market just fly, come, boom, boom. This sharp edge is a peak formation, then it is a liquidity. You can't compare it to when market does this. When market now come here, do this, take it out and drop. This is not a peak formation. This is a what? Distribution, and a redistribution, So this is your POI. So now, this is just a mere mitigation from a peak formation. So we know that it will be cleared too. So it gets cleared, but you will notice something in this one here. You will notice that you will have been like, okay, this market broke two structure. You guys did not ask that question. Structure 1, structure 2. But look at the way they broke the structure. Look at how I drew it. They blow it with a low momentum. Pay attention to that side. You can see it broke two structure, but remember the rule of momentum and distance. So it is already efficient. That is the English. So it is liquidity. So they will come for it, then they will take it out again. So coming for itself from this beginning here, you can wait for a change of character or a micro accumulation here in form of a lower time frame confirmation here to join in on this trade from the beginning itself. Because once you spot this, yeah, the aunt of it, wait for a lower time frame accumulation. Once you get lower time frame confirmation accumulation, then you buy it. Then once you get here, you take your entry, then you wait for, and because once you have this break of structure here, then you have like your 15 minutes break of structure. So then you should be expecting another pullback, which is the final pullback before the biggest expansion. So you will get here from the, because let me explain inducement trade for you. If markets come like this now, low, 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 a market break this structure as trap. This is now an inducement trade. So which means external to what? External. So if markets come here now and you see a trap and you try to get in, if you get in from here now, your target has to be external. But remember, this is not a protected high too, protected low too here. So you'll be getting in, you will get out here because it is external to external. Immediately you will see pullback. The market will pull back, then you buy again from here, then boom. That is that about that, guys. So thank you very much. Thank you for joining today's session. And I hope you guys learned a lot from it. So that is that about that. See you guys some other time. Bye-bye.
Hello, boss.
Kí ló dé mo wà pẹ̀lú ẹ̀. Oh yeah, I'm with you.
And you were going to show us something about on 15 minutes time frame that will help us with not bothering about top-down analysis anymore. You were going to show
you
us on.
whenever my trading view has decided to work. So don't worry yourself.
Oh.
Anything I promise I will do it. But now the network is so bad. I could not open that trading view. I don't know if they are doing modification or something.
Hello, boss.
Yes, brother.
I never even hear you say Kwansimodo today.
Quasimodo don't offend me today, you know.
There you go.
Quasimodo never offend me today.
There you go.
So no problem, my guys. So I hope you guys learned new things today.
Yeah, we did.
Thank you very much, sir. Thank you.
I will send the whole record in the next 10 minutes or so.
No problem. Thank you. I appreciate it.
Thank God. Thank you, sir.
I'm a Kama Bibabao.